All right. Well, everybody, welcome back. It's good to be back to the studio, and to another production or show of Mortgage Talk with Mark Hairston, where every week we attempt. Our goal is to share some knowledge and some strategies and some tips on how to improve your situation or your investments around real estate primarily. And sometimes we go off track a little bit, but today we're going to be back on track with a another special guest and a returning guest, as a matter of fact, by popular demand. My friend Lisa Love Berry is going to be back with us. She was here a couple months ago talking about credit repair. We're going to cover some of the myths of credit, some of the thoughts about people have about credit to clear that up a little bit today. So we'll welcome back Lisa. Say
Thank
hi.
you. Hi, thank you for having me back. It's super exciting to be back.
You're welcome. Well, I got some great comments from our first show. I think it was probably in August or so.
Yes.
And I thought, well, let's kind of let's keep going in this subject because
Okay.
this is a huge conversation.
Yes. Thank
This
you.
is not just a 25-minute conversation.
No.
And I want to start this show particularly around an objection I've taken to some of Dave Ramsey's training.
Okay.
Now, generally speaking, I like some of Dave Ramsey's financial advice.
Right. Right.
But one of the things he's taught for decades now is that you shouldn't have any debt. I mean, you shouldn't have any credit.
Right.
Really.
Correct.
He teaches no credit. The problem with that, it sounds good, but the problem with that is if you don't have credit, you can't have a credit score.
Correct.
And without a credit score, you can't get a conventional mortgage.
Correct.
So it's hurt some people that come to me who follow his methodology and his teachings,
Right.
but they get kind of stuck because I can't really help them.
Right. Right.
So I want you to talk a little bit about some advice you would give to someone either starting out, maybe a young couple starting out, or somebody that's even in their 30s who
Right.
doesn't have any credit, and what they can do about
Right.
that.
So that's such a good topic because Dave Ramsey does speak a lot about the paying cash for everything, but
Right.
it's really, really hard to save up, $300,000-$400,000 to buy a house.
Yeah.
And without
Or a
credit
car,
score,
even for that matter.
anything, anything these days, it's
My
very
sub was
expensive.
$8,000. We just
No, but I think that he needs to really emphasize more on the level of, if you're going to take out credit, be smart about it.
That's right.
Or take out credit that, if you're going to borrow for 30 days, pay it all off.
Sure.
But starting the journey for building credit, to be honest, this stuff should be taught in school.
Mhm.
It should,
At least high school.
at least a senior year in high school, to
Yeah.
teach personal finance and
Right.
how credit works and what to look after, things you should avoid, knowing what you're getting into when you take on credit or any
Especially some
type
of the
of
student
debt.
loan debt we have in this country.
It's outrageous.
It's crazy.
But starting their journey, there's a lot of credit unions and companies that are now offering specific types of how to build credit, a
Mhm.
secured credit card.
Mhm. Explain that.
Okay, so a secured credit card is basically you're putting your own money into the credit account, kind of like a bank account, but you use it as a credit card and they report it every month. So you put, let's say, $500 into the account.
Okay.
Well, you use $100 of it.
Okay.
Then you pay it back. After about 6 months and you've developed really good history with paying it on time, it's your own money anyway. They send it back to you and give you an unsecured account, which then you're borrowing the bank's money.
Okay.
And that's how you can, build credit.
Is it scored the same way?
It is scored the same way.
Okay.
Correct.
So when we talk about
Yes.
scoring, we're talking about FICO scoring or Vantage scores
It
and
is,
things like
it
that.
is scored the same way. And that's why you can, pay it off. You can, typically if you pay it all off, it still helps your scores just as well as if you keep a $10 balance or something low.
Okay.
But, when you're doing credit repair and you're seeking the journey of how to fix it, it's important to seek a professional. I mean, there's a lot of stuff online you can find out,
Mm.
but seek a professional. And if if somebody's going to charge you an obscene amount of money, I would be really leery on going with them, because I have a lot of clients that pay a lot of money up front and then monthly they don't ever see their score move at all. And
A lot
so
of money being $1,000 or
yes,
$5,000,
900,
something like that.
sometimes it's $300 an hour for advice.
Wow.
It can be very expensive. And if you're not seeing progress after 2 to 3 months, you're not with the right company.
Okay.
And so that's, that can be something you need to look into.
Now, for those listeners who didn't hear you the first time around, tell us more about your background. I know you from the industry, the mortgage industry.
Correct.
From primarily, but how you've evolved into this new work you do.
Correct. So I spent 17 years in mortgage finance doing loans.
One of my competitors.
Yes, we worked together at one point.
We did.
We were together at one point.
We did.
Really working for the client. Doing credit repair. Doing the loan to really get the person into the home. I had a lot of clients that had subpar credit, and so I spent a lot of time learning how to boost the score, get them over that tier, that threshold of, the next step they can do to get into a home.
What is that tier now, in your opinion? Is it 580? Is it 620? Or
at the time, it's more like 620.
Okay.
A lot of lenders will do 600, but there's guidelines and criteria that you have to meet, like debt to income ratio, that is harder at 600 than getting them, above 620.
Yeah, I just closed a client on an FHA loan. He was a 605.
Oh gosh. Okay.
But he'd also put down 5%. So
did he have to have lower debt?
Little bit, yeah, yes. Lower DTI.
Yes, yeah.
As a matter of fact, he had to pay off a truck.
Yeah. See, I mean that
to get the loan, because his debt income was a little high.
Right.
Relative.
And so, boosting the score can help clients not have to do that, pay off a vehicle or put more money
We
down.
just didn't have time.
Right. Okay. Yeah. So I spent, the 17 years doing loans and loved it, loved to help people. And when the market shifted, I realized that I think not that I'd lost my passion for it, but I felt myself going more towards the educational side of teaching people about, good credit counseling, what debt is, and more of the personal finance. So I retired from the lending side of it and went right into credit repair.
And your company is called again?
It's Fair and Square Credit Repair.
Fair and Square.
Yes.
I love the name too.
Yes, Fair and Square. You got to get fair and square.
Got to get a good ring to it. And tell us again how to find you. We want to contact you.
So you can find me online at www.fairandsquarecreditrepair or fairandsquarecredit.com or lisa@fairandsquarecredit.com. 512-839-7879.
And Lisa came all the way from Spicewood, Texas.
I did. To be over an hour drive. Yes.
So this is important stuff. So stick with us, guys. So we're going to cover today what we may call some myths, or some ideas of the general public that just aren't true around credit.
Correct.
And credit scores. I want you to kind of spearhead the conversation, but let's just start with some basic, some questions here. Some people will say that checking your own credit will lower your score.
No, yeah, that is a big myth, because you should follow your credit, whether you're doing like an Experian online, any type of your credit cards or banks offer, just a 1 score check. You should always monitor. And every year you have the ability to get through annualcreditreport.com a free copy of your credit report.
Yeah. That's a good strategy.
Everybody should be doing that because, it's not a hard inquiry.
Right.
It's just checking to see what's on there, because things pop up that are not correct on credit reports, and you should know, what's going on there.
Do those come with scores too, or no scores?
They typically do not come with the score. Okay. So that you should do with your own monitoring, but it just shows you what's on there.
Okay. All right. And for those who don't know the terminology, a hard credit pull is when you're really looking to apply for credit,
Correct.
like a mortgage or car or credit card. Like
Correct.
that's called a hard pull. A soft pull could be doing your own.
Right.
It does not affect your scores.
Correct. It does not. It
Okay.
does not.
Got it. And another misconception I've heard for years is that closing a credit card account will actually improve your scores.
Yeah, that is false.
Okay. Well, I've been telling people it's been
Yes.
false for a long time, but I want to be
Yes.
clear about that too.
Yeah, it sends red flags when you start closing accounts, especially if they have balances. It sends some red flags to the credit bureaus that something might be going on.
Mhm.
And so it actually sends your score backwards.
Okay.
So don't ever pay them off, especially long-standing credit cards, pay them off, but don't ever close them.
Okay. And I can't say for sure, but I think that's one of Dave Ramsey's things too,
Is to
because I had a
close.
couple came in, they'd had some previous credit, and they told me they were told, if you will, to close them all. And I said, that's a
Yeah.
mistake.
Yeah, it's a big mistake.
You know, go get an Exxon card. Go get credit
Well,
to what you're going to buy anyway.
Then you got to
Groceries,
start over.
gas. Yeah,
Because part of your credit score is longevity and
exactly.
history. And so when you have to go and start over, you're like a teenager again, getting credit for the first time.
Yeah, it's going to take a while to build it.
Yes.
That's right. And so when it comes to this isn't on the sheet per se, but if it comes to, let's say, a collection account,
Right.
let's say either or maybe some late payments in the past
Correct.
on a Visa card or car loan or mortgage,
Mhm.
whatever. That's going to hurt your credit, obviously. But how
Right.
long is that going to hurt your scores?
So it can stay on your credit for 7 years.
Okay.
Which it's only going to hurt your score the first year. So the first
And why
12
is that?
months.
That's confusing.
I think it has to do with the algorithms.
Okay.
Basically it hurts your score as soon as it hits, but then you have history with other accounts
Uh-huh.
that continue to help your score. So it kind of offsets.
So sort of
But
forgiveness as time goes by.
yes, same with credit inquiries. It stays on your credit for 2 years, the inquiry, but it only affects your scores for the first 12 months.
Okay. Okay. I didn't know that part.
Yeah, but collections, if you can pay them, if you have the funds to pay them within that first 12-month period, you can actually plead with the collection company to get it removed. Now, you have to negotiate it up front before you pay it,
Mhm.
because once you pay it, the chances of them removing
It's
it
almost zero.
it's really difficult. But if you can negotiate and say, hey, if I pay this, can you give me a goodwill deletion, and plead with them?
And do you work with people on that?
I do.
Okay.
Mhm. Yeah,
Okay. So if somebody had a credit card, let's say $1,000 collection,
correct.
you may negotiate a $400 payment or $300 payment or something.
Well, that's a little different because the only way they'll delete it is if you pay it in full.
Okay.
If you make payments, they're going to mark your credit as paid in full, either for less than full amount if you settle it, or just paid in full. They won't necessarily remove it right away.
Okay. And if they do remove it, that's really the goal.
The goal is to get it removed if it's within the first two years.
2 years.
After that, it's not going to really help too much.
Okay. All right. Now, when it comes to medical collections, it seems, and I probably know this better, around underwriting guidelines for medical collections. I think there's some changes around that.
Yeah. So if you have a, let's say you go to the doctor and, it's above the copay and you have $100 or $200 balance. If you can negotiate a payment plan with the doctor or the hospital, they cannot send you to collections, even if you're paying $5 or $10
Okay.
a month.
Is that new?
No, it's been around for a while.
Okay.
As
didn't know
long
that.
as you put a plan together with them and
Okay.
you make the payments. If they send you to collections now, it can only be reported on your credit if it's above $500. If it's under $500, the doctor or hospital cannot send it to credit.
Okay. Maybe that's what the change
That's
I
a new
heard.
change.
Yeah, I
That is
remember
a
it's
new
something about
change.
$500.
Yeah, that's a new change. So anything over that 502, 501,
Yeah.
they're sending you to collection.
Yeah, because I had a friend of mine a couple of years ago, very successful guy, but he got sideways with his insurance company. He decided not to pay his little
Yeah.
balance. It
Yeah.
was like $170,
Yes.
and it really hurt.
Yes.
But this was a few years ago.
Yeah, it can really hurt your score 50,
Yeah,
60
it
points.
wasn't good.
It's harder. It's so easy for it to go down, but it's so hard to get it
I
back
know.
up. You have to really beg,
It's just
negotiate.
interest rates are just the opposite. They rarely come down,
Yeah.
or they slowly come
Yeah.
down, but they go up really
Yeah.
fast. That's been my experience. So also here's a myth. You can erase negative information from your credit report. Now, that's kind of a yes or no.
You cannot erase it.
Mhm.
You
You can negotiate it?
You can negotiate it.
Okay.
You can. So for example, I had a client that had an apartment collection, and this is a particular athlete that had a apartment collection, and no fault of his. He had a roommate. It was supposed to be paid, but he was on the lease. Then, he didn't even realize it didn't get paid. He had paid the money, but then it went to collection. So I called the collection company, talked to them about the situation, asked if he paid it, if they would give him a goodwill deletion, and they did. And it raised his scores 55 points.
Good.
So, I mean, you can negotiate. You just have to put in a little bit of the work, and people can do it on their own too. They just don't know what to do, and they don't really spend the time, or and they don't know the verbiage or what to ask for.
It's like me in a car. I don't know how to fix a car, so I just take it to my guy.
Exactly.
And he just charges me, and I drive away.
Exactly. But you can't erase it.
Right.
Now you can erase inaccuracies if something was. Let's say you have something set up on auto draft with your bank, and they don't send it, and you don't realize, and it goes into collection. That can be erased.
Okay.
That can be cleaned up. You can negotiate. You can call the creditor if you miss a car payment. If you're struggling, call the creditor and ask for a deferment before you let anything go into collection or late payment. Just ask them. They're more than likely willing to work with you, but if you hide, they're just going to do their job.
Yeah. I was looking at my mortgage statement on one of my properties. It said if you have COVID related issues, give us a call.
Yeah.
I'm thinking, I really don't want to make this mortgage payment. Maybe I'll just tell them I have COVID.
Yeah.
I didn't do it.
Then they put it on the back end.
That's right.
Yeah.
And with extra interest, et cetera, et cetera. And now this is another myth or a misunderstanding, if nothing else. It's around joint credit.
Right.
Okay. So if a married couple come in and they buy a home together, and they're both on the mortgage,
right,
and they get divorced.
Yes.
It happens all the time.
Yes.
But the myth or the misunderstanding is that the person who takes the property is still the only one obligated for the mortgage, and that's generally not true.
That's incorrect. Yes.
That's right.
Yeah. So
that causes a lot of heartache.
It does, and there's some negative sides to that, because if one person didn't want the divorce, or they're angry, it's really sad, because then it affects the other person. It affects you if you're going to default, but then it affects the other person too. The recommendation is to refinance and get off of it as soon as you can, because if they miss a payment, that affects your credit, and you're still liable for the mortgage payment, even if you're divorced.
How would you know it's not made on time? That's the other thing. You've moved on.
So typically you would probably get a call, or the bank because the bank has your information.
That's right.
They don't know you got divorced.
Right.
And so they're gonna
reach out.
They're gonna reach out, and they want their money.
Reach out and touch somebody.
Yeah, exactly. They want their money. But no, refinance, get off of it as soon as you can, because same with credit cards or cars.
Mm-hmm.
Have the person that's keeping it refinance. force it in the divorce, whatever you have to do.
But it's a little harder in real estate than a credit card.
Correct.
A credit card, you can make a phone call, can't you? Generally,
No.
No?
If you're on it, it has to be a court awarded.
yeah. But once it's
amount.
in the divorce decree,
Yes,
it's a little easier.
Yes, you can.
Yeah.
But a mortgage, you're on title.
You're on
title, and technically, you're still responsible until you're removed from it.
Yeah. Okay. Good to know. Let's see here. What else do you think
Okay,
people need to know?
Yeah, so myth, creditors can report late payments immediately. That's false. You have your statement comes out, or you're obligated to pay at a certain time. And if you miss it by 5 days, you're not counted late until you're 30 days past due. So people will think, oh, I'm late. I'm a day or two behind. That's late to the bank, to the creditor, but to a credit report, that's not late until it's 30 days late. So on day 31, they're going to be sending you to a late payment, and that's going to hurt you.
Yeah, that's going to hurt. Okay.
Yeah.
So I got my Dillard's bill last week, and I had missed a payment. And it was not much.
Yeah.
The minimum payment was like $40 or something, and then there was a $29 fee.
Late fee. Yeah.
And so I had to pay it. I did pay it.
But you weren't 30 days late.
No.
So
No, I was
it affects you in the late fee.
You're right.
But doesn't affect you in the credit score.
Right.
Yeah.
It's so disappointing.
Yeah.
And let's talk about I don't know this part either, but I'm seeing nowadays more and more people that are having their rent and utility bills on their credit report.
Correct.
Does that help?
It can. It can help. It's not going to help as much as like perfect pay history, but it can help with trends, how well you pay your debts.
Okay.
So, and it costs the consumer money monthly to do that.
It does?
It does. It can be $6 to $8 a month, because it costs. So when you're a creditor, you're a bank, it costs you money. You pay money to report to the bureaus every month. You're paying a fee. So when your apartment complex gives you the right or the option to have it reported, it can show history, like payment history.
Yeah.
And that helps if you're trying to rent another apartment, or trying to rent a house.
Okay.
And let's say your scores aren't that good, but you pay perfect rent.
Yeah.
That can help you, get into a home that, somebody might be on the fence with. But yeah, self-reported, I've even seen self-reported Netflix.
Okay. I didn't know. I saw it the other day, as a matter of fact.
Yeah.
And in the old days, when we would underwrite loans, we would call that a compensating factor.
Correct.
I just didn't know if it actually helped the score.
It does a little.
A little bit.
It's not a lot.
Okay.
It's just a little. So it still acts as a compensating factor.
Right.
Yes.
And that did for this guy too.
Yeah,
for sure.
Awesome.
Here's another myth around bankruptcy. We haven't seen a lot of, at least I haven't in my business over the last few years, around bankruptcies. We did in the crash.
Yes.
But I think they're going to be coming back. I think they're coming back.
Yeah.
And so if somebody were to file a Chapter 7 bankruptcy, can they establish credit?
They can. Yeah. It takes a little while.
Okay.
Because, once you file Chapter 7, you're still kind of in shock, and you're cooling off. The way that you can establish credit, and you have to pretty much as soon as you can, is secured credit card.
Okay. And what's the minimum? Is it $500?
You can do a $300.
Okay.
$300 secured account. You might want to start with, get 2 secured accounts, because as you rebuild, you have to have positive accounts to offset the negative stuff that's happened. And a bankruptcy is negative.
Now, bankruptcies, impact on your score as opposed to the collection we talked about earlier? We talked about 2 years.
Right.
Is that going to be the same for bankruptcy, or is it stay? I mean, I know it stays in the report long, but how long does it affect you?
Bankruptcy can be on your credit for 7 to 10 years.
Okay.
And it's up to, I spent some time trying to get a bankruptcy removed after it was like almost 8 years on this client's credit report. And I was told no. I was literally told no by the bureaus that they have an option to leave it there for 10 years.
Mm-hmm. That's a long time.
It is. It's a long time to hurt someone.
A long time. You know?
Yes.
But another myth, and we only got a few seconds here, is around also bankruptcy does not stay a foreclosure. It may temporarily stop it, but if you're behind on your mortgage payments, the courts, you'll still lose your property.
You can. The bankruptcy can help you
For a while.
For a little while to, get things in order and get it cleared up. But if you are not making your payments after the bankruptcy, you can still go into foreclosure.
Yeah.
Correct.
All right. Well, that was a great time with you again, Lisa.
Yes.
I guess this 25 or 26 minutes went quick.
It goes by fast.
It goes by fast. So
yes.
let's again find out how to find you.
Yeah, so you can reach me at 512-839-7879 at Fair and Square Credit Repair. I am in I'm local in Spicewood, and I serve the whole Texas area.
All right. Well, thanks again.
Thank you.
And guys, thanks for being with us, and we look forward to seeing you next week.
Thank you.